2:03 now, inshallah. I think we'll go ahead and get started. We were trying to wait for a few more attendees to join. But inshallah, we'll go ahead and get started in the interest of time. So, assalamu alaikum, everyone. Welcome to the presentation on calculating zakah on modern financial assets. There's a lot to learn about zakah, the obligatory charity owed by Muslims. And this presentation will hopefully provide a brief overview of those who should pay zakah, what property it is owed on, and how to calculate it on certain assets. So let's just take a moment to introduce your presenters for today. We're joined today by Assad's president and CEO, Bashar Qasim, who is a certified Sharia advisor and auditor, one of the few in the U.S. who holds that distinction. And my name is Fatima Iqbal. I'm a certified financial planner at Assad, joining you today from Chicago. And I'll be giving the main presentation today, and Bashar will inshallah answer questions from the audience at the end. So just to give you some quick background info on Assad, we're a boutique firm located outside Washington, D.C. Assad offers halal, socially responsible investment solutions, including mutual funds, custom wealth management, and retirement programs for businesses of all sizes. We're registered with the SEC as an investment advisory firm, and we work with clients nationwide. Our dedicated team includes chartered financial analysts and certified financial planners. So now let's turn to today's topic, which is zakah. Please note that we're presenting information based on generally accepted Islamic principles following standards published by AOFI, which is the accounting and auditing organization for Islamic financial institutions. It's not intended to be comprehensive in all schools of thought, and this webinar is intended to provide a brief overview explaining the general principles of zakah calculation. And you can always learn more by contacting us at Assad at 1-888-86-AZZAV. So first, let's understand the basics of zakah. Zakah is a financial obligation that every Muslim must pay on certain assets that are worth more than a certain amount, called the nisab, and that have been owned for a period of 12 lunar months, called the howl. And while giving to charity is a financial transaction, of course, it's an integral part of a Muslim's spiritual health, and we should take care to make sure it's handled correctly. Zakah is an opportunity to bless your wealth by giving it to those in need. Zakah is obligatory on every living Muslim regardless of gender, age, or mental status, who owns a certain number of assets that have reached a minimum amount and that have been held for at least 12 lunar months, and that meet the other conditions of zakah. However, if certain conditions are not met, then it does not remain compulsory, and we'll discuss this next. So what are the conditions that must be met before zakah becomes obligatory? First, the total amount of wealth owned by an individual must meet a minimum threshold called the nisab. And while prophetic hadith describes threshold or nisab for different assets such as gold, silver, and livestock, the question is what nisab is relevant on our modern financial assets. The nisab can be determined based on the nisab of silver or gold, and this is equal to the current market value of 85 grams of gold or 595 grams of silver. According to the Hanafi and Maliki juristic schools, the nisab is calculated at the beginning and end of the year, and changes in between are overlooked. So any increase of property after reaching this nisab during the year is to be included in the total sum calculated for zakah. And this is considered the easiest and most applicable among the other juristic views, which has the majority of scholars adopted. So what happens if the wealth reaches the minimum amount, or the nisab? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the nisab, and this time period is called the howl. The third condition that must be met is that the assets must be completely owned by a particular person. So that means the assets owned by an organization or government are not zakatable. Zakah is liable on the assets that are completely owned and vested for the owners. Complete ownership requires that the assets be accessible and disposable by the owners without the interference of others. So if you completely own an asset but would have to pay taxes or penalties if you sold it, this does not nullify the fact that you own it. So for example, an individual who has an IRA or an individual retirement account can access the money in the account even though they would have to pay a penalty and taxes if they sold it before reaching the retirement age. This fact does not prevent the IRA from being zakatable. but Zakah would only be calculated on the amount that would be left after applicable taxes and penalties. On the other hand, an employee cannot withdraw from a 401k or 403b account at their current job if they're below the distribution age. This is the 401k or 403b is not zakatable until the employee either leaves that job or reaches the age when they're allowed to withdraw from the account. The fourth condition is that assets must have some real or assumed growth. And finally, there shouldn't be any other reason an asset is not zakatable, such as insolvency. So there are certain assets on which zakah is not owed. Assets that are considered to be capital goods, such as tools or factories, are not zakatable themselves. However, the income that is derived from them is zakatable upon meeting the conditions we discussed earlier. Furthermore, personal use property is not zakatable. So that means your personal residence, vehicles, clothing, and other personal belongings. Only halal and lawful assets are zakatable. So no zakah is required on haram or unlawful assets, for example, money derived from interest, gambling, alcohol, or pork, or stolen money, bribe money, or any other impure money. And such assets or money must be returned to their lawful owners or donated to charity as purification. Purification is not a form of zakah or sadaqah, and it's only intended to rid oneself from impure money that one never intended to benefit from. So in modern financial times, this includes securities or stocks that are deemed not to be halal according to Sharia investment guidelines, such as financial options and derivatives. At Assad Asset Management, we use halal investment guidelines established by AOFI and adopted by the Assad Sharia Advisory Board. Finally, assets intended for retained ownership and for the purpose of deriving income are not zakatable. So this means that zakah is not owed on the current market value of investment property and income-oriented stocks. Instead, the income derived from them is zakatable, as is the case with capital goods. So for example, zakah is not paid on the market value of a rental property. However, income that is derived as rent and is held for the howl period is zakatable. So in calculating zakah, we start with the zakah base, which equals all zakatable assets minus liabilities or debts that are payable by the howl date. Zakah is not obligatory on wages, salaries, and income at the time of receiving such income, but zakah is assessed based on conditions we discussed earlier and must meet the ownership and howl period requirements. So assets that are zakatable include gold and silver, cash, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. And all cash and gold and silver are liable for zakah at 2.5% based on their values on the day of the howl. If the howl is linked to the solar year, zakah is actually 2.577% instead of 2.5% to make up for the difference between the lunar and the solar calendars. In the interest of keeping things brief and saving some time for questions at the end, let's go ahead and jump to the heart of the presentation, which is how to calculate zakah on modern financial assets, specifically on debt and stocks. So let's start with debt. If you make a loan, you owe zakah on any amount repaid as of the howl date if it's in good standing. If the loan is past and in bad standing, no zakah is owed until the owner recovers the debt, and the zakah is paid once for all past years it was in bad standing. So if you've taken a loan and owe debt, the amount due before the howl date is deductible from one's zakah base. However, debt payments that are due after the howl date are not deductible from the zakah base. So for example, a person may deduct their current home mortgage payment from their zakah base, not the entire loan amount. The interest of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets, or aru tijara, from one's zakah base. This relates to modern financial assets. Bonds are also a form of debt. However, interest-based debt securities such as bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid and liable for zakah only on the principal amount, or the market value, whichever is lower. Any gain due to interest accrued or market appreciation is not recognized as lawful and is not eligible for zakah, and such gains should be considered unlawful and purified by donating to charity. Now, before we discuss how to calculate Zakah on growth stocks and income stocks, let's briefly recap the kinds of accounts that can hold stocks first. For these accounts, we should refer to the conditions of Zakah to see whether the owner has complete ownership. Owners have full ownership in accounts like IRAs and education savings accounts, but may have to pay taxes or a penalty when time. So for accounts with full ownership, Zakah is owed on the amount owned after taxes and penalties. However, for accounts that do not have full ownership, like current 401k accounts, there is no Zakah due since ownership is not complete. So we've gone through who is liable for Zakah and what assets and account types are Zakatable. So now let's talk about the calculation of Zakah on stocks. And we'll use common stocks as an example since we get a lot of questions about them. Of course, our clients at Assad know that we calculate Zakah for them on an annual basis, and we send a statement showing the total amount to be purified and paid from their portfolios. But this calculation can be used for shares of publicly traded companies that you may acquire. So for the purpose of this explanation, we'll assume that the stocks you're holding follow halal Islamic guidelines, since Zakah is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing a stock. Either you purchase it for growth and appreciation of the stock, or for the income or dividends it can provide. And with this distinction, let's take a look at how we can calculate Zakah on a portfolio of stocks. So while a shareholder may reap the benefits of both growth and income from our particular holding, the original intention of why it was purchased is the key. So unlike taxes, we don't have the IRS looking over our shoulder, but because Zakah is a matter between yourself and God, your intention regarding your investment determines which calculation you should use. The Zakah on a portfolio of stocks will be calculated by adding the Zakah owed on income stocks and Zakah owed on growth stocks. So you may be wondering why differentiate between growth and income stocks. Stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading and are considered commercial goods, or in Arabic, arud tijara. For these shares, their Zakah base will be based on the total closing market value of shares owned, or the net asset value on the HAL date. And then this net asset value is simply multiplied by 2.5%. Stocks held for the purpose of deriving an income or for benefiting from dividends are considered to be capital goods, or arud ghaniya. And Zakah is not paid on the net asset value, but instead on the income that is derived from it. So now we've gone through a brief overview of how to calculate Zakah on growth and income stocks, which are two investments commonly held by the American Muslim investor. And now actually this brings us to the end of the formal presentation, and I want to open up the conversation to questions from the webinar attendees. So everyone, if you'd like to ask a question about Zakah, please do so using the Ask a Question box on your screen. And we're going to bring in Assad's President and CEO, Bashar Qasim, to answer some of the more complex questions. Bashar, again, is a certified Sharia advisor and auditor. And this is an accreditation awarded by AOFI, which is the global standard-setting body for halal investing that I mentioned at the beginning. So again, if you have any questions, please go ahead and type them into the box, and we would like to start answering any questions that you might have. I'll also at this time draw your attention to the Handouts tab in the webinar dashboard, and that's where we've put Assad's Ethical and Sharia Investment Guidelines, as well as our Independent Sharia Verification document for your reference. So again, any questions that you'd like to ask, please go ahead and type them into the questions box in your webinar dashboard. So the first question, Bashar, are you with us?
Yes, I'm with you.
Okay, great. We're just waiting for some more questions. I'm just going to go back while we're waiting. Since we did have some audio disturbance, I just want to again go through the Zakah of income stocks. So again, the idea is that Zakah is not paid on the full net asset value, but on the income that is derived from an income stock. And because that is difficult to track, unless data is available, you can estimate this by dividing the current assets by the total number of outstanding shares. And the Zakah base will be any amount in excess of 0. And of course, if you have better estimation methods, then you should utilize those as well.
Fatima, this is Bashar. I just want to clarify one thing here about the Zakah of income stocks. The income is part of it, but actually also you have to do what we call look through. In other words, we have to look at the balance sheet of the company that we're calculating the Zakah for its share. And so the income, as you know, companies, when they earn that income, becomes part of the balance sheet unless they spend that income. So the way to assess the Zakah on this is actually by looking at the current assets. If you find any zakatable assets more detailed about the zakatable assets of the companies, like if they own inventory for sale, if they own cash and cash equivalent, liquid investments, etc., then that's it. Then you use these numbers. So here we are using the current assets as a way of estimation, what the scholars call khars. And so any estimated number or any number that brings us to the zakatable assets that you can identify in the balance sheet of the company, then that will become the basis for assessing the zakah. So in our case, the current asset is usually reported. So we use the current asset as the best khars methodology to assess the zakat per outstanding shares. So I just want to clarify how to assess the zakat on stocks that you own for deriving an income, what we call urud mustaghallat. The scholars, the contemporary scholars define those type of investment as urud mustaghallat, where you're deriving an income. So what you do here, you do just look through.
Okay, and we did have a question just to clarify what are outstanding shares related to income stocks. You see this on the screen. The number of outstanding shares are basically the number of shares that the company has issued. So again, that's what we mean by outstanding shares. Bashar, we have a question here. If you have a 401k with an employer and you leave, does the 401k become zakatable?
That's an excellent question. And again, Fatima, as you explained, the zakatable conditions or the requirement for the assets to be liable for zakah is the complete ownership. So when you leave the company, actually the company gives you the choice either to leave the assets or to do a rollover and take control of these assets. Just for the fact that they enable you to take control of these assets become zakatable immediately if they reach the howl.
Okay. Another question. So the attendee is asking, so I know I can deduct mortgage payments for the past 12 months. Would I be deducting the full mortgage payments, including the taxes, or just the debt amount? So again, the question being that if their payment includes taxes, property taxes that again the company is collecting on their behalf, is that also deductible or only the debt portion?
Yeah. Excellent question. Any amount that is due before the howl, that type of debt is deductible. So whether taxes, mortgage payment, etc. So that becomes deductible. You're right. You can deduct it from the zakatable base of your assets.
Okay. Another question is from an attendee who actually owns the Assad Ethical Fund in their 401k. Can you explain the formula for Zakah calculation on the Assad Ethical Fund?
Very good. So the formula for calculating the Zakah, we look at the total assets, the zakatable assets. And since this is a fund, the investment objective is to benefit from the price appreciation of the shares that the fund own or invest in, those would be treated like urud tijara. And the way you calculate the zakah, we look as of Sha'ban 23rd, which is May 30th, and we look at the net asset value for all the assets in the Assad ethical fund. If there is also any cash, the cash will be added. Then we divide the zakatable assets on the total outstanding shares, so you get the zakatable base per share. So then what you do, you use this number to multiply the total number of shares that you have, then you multiply it by 2.5. Then you take into consideration whether the type of account, whether this is an IRA account, is it an IRA account for the person on it older than 59.5 or less than 59.5. So in this case, you deduct from that before you multiply 2.5 with any taxes due or any penalties. And then after you remove, let's say, based on your tax bracket, then you multiply the net by 2.5%, and that becomes your Zakah.
Okay. Again, the Assad Ethical Fund is a growth-oriented fund, so you would use the calculation for Zakah on growth stocks. Next question, do we have to apply Zakah for employee stock option plans?
Yes. For employees stock option plan, first let's explore a little bit the option. As Fatima mentioned, the options, they are a right that the company offer to the employees where they can buy, they have the option to buy shares of the companies that they work in at a certain price. So the option itself does not really constitute a full ownership because this is just an option of the share itself. So the underlying stocks has not been owned yet. So in this case, these options would not be zakatable.
Okay. Another question. This is actually coming from somebody who rolled over their pension to Assad less than a year ago, and they're asking, will Assad calculate the Zakah for me, and when will I receive that info?
The clients or the investors who invest in the Assad Ethical Fund and the Assad Ethical Wrapper program, which is our wealth management program, as usual, you will be provided with the Zakah usually within the first 2 weeks of Ramadan. So they are very close to release these numbers. Hopefully, inshallah, will be early next week.
And as Bashar mentioned earlier, when we calculate the Zakah for our clients, we use the 23rd of Shaban as the howl date, the cutoff date. But of course, if you are investing in the Assad Ethical Fund or the Assad Wise Capital Fund, of course, you would want to use the howl date that you're using for your Zakah. Next question, can you elaborate on the difference of Zakah obligation regarding IRA or 401k accounts, such as a profit-sharing fund?
Yeah. Well, the IRA, as you know, the IRA is an individual retirement account where the owner can access these assets and they can do whatever you want. It's under their control. The 401k is different. It's a retirement plan, but it's sponsored by the business. And usually it abides by certain rules defined in the adoption agreement of the 401k or 403b plan. Usually in these plans, there are different ways of incentives that the employer offer, such as the match, and sometimes they utilize vesting schedules, etc. So usually, if you are enabled to withdraw this money, then those assets become zakatable, and you pay the zakah only on the vested amount. Now, most of these 401k for the employees or the participants, they're not allowed to withdraw the money, so they cannot really access the employee cannot access the money. So in this case, that money lose the very important requirement for the assets to be zakatable, which is the complete ownership. If you are a participant or and employee, and you cannot access this money, you cannot withdraw it and run it yourself, then these assets or these 401k plans will not be zakatable. But if you are enabled, either because you reach the age of 60, for example, some of these adoption agreement depends, you need to consult with the administrator or what we call the third-party administrator, TPA, if you plan to know the rules there. Or if you resign, then you will have the choice to withdraw or roll over. We call it roll over, or withdraw this money. Then in this case, these accounts become zakatable, even if it stays within the 401k. So it depends on your situation, whether, again, the illah, what we call the cause of the zakah, is whether you can access and dispose this money or not.
Okay. Another question, what is the difference between interest earned on savings or checking accounts and the dividend earned in the same account?
So usually,
go ahead.
Usually the interest earned, that is usually coming from certain securities that you own in your account, such as bonds or CDs, etc. So those interests itself, they are not halal assets. This is like most likely is a form of riba, and those would not be zakatable. And the right thing to do is to change your investment and invested in securities that pay dividends. Dividends are different. Usually dividends, if the company comply with the Islamic guidelines adopted by majority of scholars and in particular AOFI guidelines, then the dividend distributed, this is an income that the company distribute as part of the profit that they make from the business. This is a form of a profit. This is halal, and you can pay the zakah on it once it becomes part of your asset, when it's really paid into your account and the whole lasted for 1 lunar year. So that becomes zakatable.
Okay. So again, the interest earned being different from the dividends, with interest again being unlawful, dividends, depending, as long as the company follows the guidelines, would be lawful. Going back just an old question, it looks like an attendee wants clarification about the mortgage payment. So again, it is only the current month's mortgage payment that you can deduct. It's not the total loan amount. Next question, do you only deduct the assets in the main country of residence, or does one also have to include assets overseas? So somebody owns property or assets abroad, and it seems like maybe this is related to maybe debt. I'm assuming because the question is about deducting assets. Would they deduct the debt in the main country of residence, or also include the assets overseas?
Yes, that's a very good question. So the debt that is deductible is the debt that is due before the time of the howl. The debt that is beyond the howl date, this debt is not deductible unless this debt is used to finance a zakatable asset. Give you an example for that. Let's say a real estate broker who buy and sell houses, but the real estate broker uses a method of finance to acquire or leverage leverage these houses. So in this case, the houses that he buy and sell becomes urud tijara, and they are liable for zakah. But he pays the zakah on the amount less any debt, whether it is current or deferred debt on these properties. So in this case, the debt used or the debt used to finance these commercial goods becomes deductible. So let's say somebody buys a house that is $500,000, and then he used like $300,000 as a method of finance. Let's say they go and they utilize a method of finance where they acquire a debt of about $300,000. In this case, at the time of the house, you look at the NAV, at the market value of the house, at the house. And let's say the market value of the house is about $525,000. So you take $525,000, reduce it by $300,000, so you pay the Zakat on $225,000.
Next question, is the determination of the howl date arbitrary? Do I pick a date and it becomes my annual date each year, or is there a defined date in the Sharia?
There is no defined date for howl. Many Muslims, they like to make the howl dates around Ramadan, so they have the opportunity to pay the Zakah during the holy month of Ramadan, where the deeds are rewarded in multiples. But you can define your howl. You can set the howl. You can set the howl based on a lunar year, 12 lunar months. We've seen some clients that they set the howl based on solar year. And in this case, they just add 3% to the amount of Zakah that they calculate. So in other words, instead of using 2.5%, they use 2.577% of the Zakat to utilize the howl based on the solar year. That is no problem with that. Also, some people, for example, they like to set the howl in different times of the year. This is also acceptable, as long as, again, based on the 12 lunar months. Now, I want to also clarify something here, that you don't have to pay your Zakah after the howl. You can prepay the Zakah. It is acceptable. The Prophet, peace be upon him, accepted the Zakah from his uncle in Abbas, who used to prepay the Zakah 1 year or 2 years or 3 years. So this is a way also that you can be charitable all year long. You need to keep records of the money that you paid for Zakah, and maybe at the time of the howl you can settle the Zakah.
Okay. Next question, is there a chart to explain the Assad Ethical Fund calculation? Again, we discussed that the Assad Ethical Fund is a growth-oriented fund. So the Zakah would be 2.5% of the net asset value as of your howl date. And again, you have to consider what type of account this is in. Is it in an IRA where there may be taxes and penalties that would be levied before money would actually get to you? That would need to be subtracted. But if you have any questions, again, you're more than welcome to reach out to us, and we can help you with additional calculations and answering your questions about the fund.
Adam, I see a question here that if the 401k is mostly stocks, are they considered as income generated? Usually, in this case, if the 401k is managed by you, then you go by your intention or your investment objective. If it's really managed by a financial advisor or a portfolio manager, then you ask the manager what is his intention from owning or buying the stocks, whether to sell it later on or to derive a dividend from it. So based on that, that would define whether this stock is zakatable at the net asset value or zakatable at the level of the zakatable assets on the balance sheet.
Okay, and this is a question going back to deduction of debt. So this attendee has heard that the house mortgage is not deductible, neither are the monthly payments. Again, can you just go over the deduction of debt or a mortgage payment, and whether, and I think maybe what the attendee is also getting at is whether that mortgage is a conventional mortgage with interest-based, or is it maybe a Islamically financed contract for debt?
Well, again, the mortgage itself, again, the general rule that if the debt is due before the time of the house, then this debt is deductible. Any debt that is after the debt of the house is not deductible, unless, and I think in most cases, of course, people, they have mortgage on the home they live in. So all what they can deduct is just the amount of past due amount that is at the time of the house. Any debt or any mortgage beyond that, that would not be deductible. Now, in the case, as we said, in real estate broker, where the agent or the broker himself or the investor buy and sell houses, or they flip houses, and they use a form of debt. So this debt that used to finance these zakatable assets, that what we call urud tijara in this case, that debt is deductible, whether before the haul or after the haul. The whole debt amount would be deductible, and you will pay zakat on the net amount.
Next question, if I have a portfolio of stocks, both income and growth, do I just pay 2.5% on the current value of the portfolio for zakah? So earlier in the presentation, we did go through how you pay zakah on income stocks versus stocks that are for growth. And again, your intention is what you would use to calculate. So again, like we mentioned, there's no one looking over your shoulder. Of course, whether this stock was purchased for income, or if you purchased it for growth. And so you would pay the zakat accordingly. Again, if it's for growth, then you pay 2.5% on the net asset value. If it is for income, then you can use the estimation method that we described earlier to calculate an estimated amount of the zakat base and calculate the zakat that way. But we will have this presentation available afterwards, so anyone who missed that can hopefully review the slides and the presentation again. Please feel free to reach out to us with any questions. We have, again, a reminder actually from one of our attendees about purifying interest. So, Bashar, can you elaborate a little bit how someone can purify any interest? Maybe they tried their best to avoid it, but they still may have some that may have creeped into their accounts. Like, how can they purify that impermissible amount of interest?
Usually, the interest that you earned where you're not a party to the transaction. In this case, when you invest in certain companies, let's say you invest in Home Depot, and Home Depot, they put their money, the cash, although they are in the hardware store providing and selling hardware services. Now, Home Depot, they may have cash. They put this cash in the bank, and as many companies do, and they earn interest on that. So usually this will come on the profit and loss statement of the company. So if you look at the profit and loss, the yearly loss profit statement, you will find the amount of interest. In this case, that would be the amount of interest for all the shares of the company. Divide this by the number of outstanding shares, and then that will come the interest earned per share, multiplied by the number of shares that you have from Home Depot, and that would be the amount of interest that you need to purify from your account. So what you do, you just donate that money to a charity. So that's how you purify the interest. If there's any interest also you earned, some people, they may have some cash, and as you know, many brokerage companies, they may have this cash sitting in a money market fund that you have no choice, so you also assess that money and you give it away for charity. By the way they do the purification, you don't have to really pay those money from the account, let's say from the investment account you own, or from the 401k or retirement account. You can just pay it from any assets that you have. It will be equitable. So you just write the check for the amount after you assess all the interest. And this would be just as a way of cleansing. It's not really a form of sadaqah or anything like that. And you should not really, when you give that money away, you should not benefit from that money directly or indirectly, not even use it to offset some taxes. There should be no benefits whatsoever for that money. And also, scholars said that you can donate that money in any charitable distribution. You just avoid using that money to build the masjid or to print the Quran, because this should be from the best of your money.
Next question about how to calculate Zakah on educational assets. So education savings accounts, 501 accounts, custodial accounts, Atma accounts, which are for saving money for educational purposes. How do you calculate Zakah on those?
Those assets that, like Agma account, these are zakatable assets. You will assess the zakah. Again, you reduce the zakatable base by any taxes due or there is any penalty, like the 529, for example, or the cover bill account. You reduce any taxes or any penalties, and then you assess the zakah on the net.
And just a reminder, again, Zakah is due only on halal assets. So if you are investing in any plan where you don't have halal investment options, or there may be, for example, bonds in that portfolio, that portion is actually not zakatable. So it's something just to be aware of. Another question.
The bond, just the bond, I just want to clarify here something. When it comes to the bond, like how you pay the zakah on that, you look at the value of this bond, because as you know, the bond is a paper of debt, and it's tradable. So here, Islam or the Sharia recognize your principle. So you look at what is your principle. If the value of the paper more than your principle, you just pay the zakah on the principle. You ignore that extra money, and if the value is below your principal, then you go with the value that is below your principal, and you pay the zakah on that. And also, as again, you should exit from those type of investment. Especially now, there are many alternatives to the bond, which is sukuk, because sukuk they are the Islamic alternative to bond. So instead of having a security that is based on that derive income from borrowing, lending, and interest, now we have the sukuk that derive their income from purchase and lease.
This is a question that is asking, again, it seems like relating to whether this property is zakatable. So it looks like this attendee bought a home with no mortgage for the intention of having their mother-in-law live in the home, and the mother-in-law lives there but pays no rent. So does the attendee have to pay zakah on the value of the house?
Well, again, if they bought it for use and not to sell it later on, so that would not make the house treated as a root tijara. So there would be no zakah on the value of the house. So the zakah is zero.
Okay. Next question. If the 401k is mostly stocks, are they considered as income generating like dividends or something else? Then would one pay zakah on the dividends or the total 401k value? So the question goes back to what we discussed earlier. Your 401k can hold stocks, and they can be either income or growth. If they're considered income generating stocks, then of course you would use the formula for estimating the zakah. And again, Bashar, maybe you can just clarify, then would one pay zakah on the dividends or the total 401k value? Maybe
no, you disregard the dividends, exactly. So, I mean, if the dividends becomes part of the account or reinvested again, you just look and let's say whether those are growth stocks that you owned for the purpose of benefiting from the price appreciation, and that's your intention, then you just go by the net asset value for those shares at the time of the house. But if these stocks, you purchase them to derive an income and you benefit from the dividends, you just use the balance sheet. You disregard the dividend itself, because again, mostly these dividends reinvested, correct? So they're no longer dividends anymore. So in this case, you look at the current assets per share divided by the outstanding shares of the company that you're calculating the Zakat based, then you multiply by the number of shares you own from that company. Now, if the dividend stays cash sitting in the account, yeah, that becomes part of the asset. I want just really to clarify an area that I see many investors, they are confused about. And unfortunately, this is coming from the way that because it's an accounting dilemma, which the Zakah here is actually based on assets, not on income. The Islamic the fiqh institution, the fiqh council institutions around the world, they calculate Zakah based on assets, not based on an income. So Zakah is a balance sheet item, not a profit and loss item. So just look at the assets that you have. The scholars, even when they discuss Zakah on certain real estate properties, that they say the Zakah is on the rental that derived, but also they say that this rental stayed in your possession for 1 lunar year, which really becomes as an asset, no longer is an income. So just to help yourself and avoid the confusion, when you calculate the Zakah, look on the balance sheet, look on the assets, not on the profit and loss statement or an income. You could earn $1 million and then spend that $1 million before the time of the Hawl, and there will be no Zakah on that money. So again, Zakah is on assets.
And this is actually a good follow-up question. Somebody's asking about if they own an investment property for rental, do they pay any Zakah on the equity in the house, which would be the market value minus the amount that they still owe in debt? And again, so this is an investment property for rental. Would they pay any Zakah on the equity?
Yeah, that's a very good question. Remember, the investment property that is used to income would not constitute the property as a urud tijara. So there will be no Zakah on the market value. So the Zakah again will be on any rental income that you earned and lasted for 1 lunar year, which is again no longer is an income. It becomes a zakatable asset, like the cash that you earned and you kept for 1 lunar year. So that one becomes zakatable. But rental property itself is not zakatable. So the debt that you owe on that rental property cannot be deducted from your zakatable base. Very, very good question.
And we are trying to get through as many questions as we can. The next one, do I only calculate on the difference between profit and loss or the total amount in my 401k? So actually this, I think, Bashar, is a question we get a lot from clients. Do they just take a look at how much their account has gained or lost? If there's a gain, do they calculate Zakah, or do they look at the total value in their 401k?
Again, Zakah is assessed based on the balance sheet, based on the market value of the securities, whether they go up or down. So let's say you assess the zakatable, you assess the Zakah on a portfolio that you own, and the value of that portfolio is $100,000 at the time of the Hawl. Then you pay the Zakah on that amount for that year. Next year, let's say the value went down to $90,000. So you pay the Zakah on the $90,000. The year after, it went up to $150,000. So you pay the Zakah on $150,000. You do not look at the profit or gain, because again, these are like we follow the market value. So the market value can go up and down, and that's the amount of the Zakah also can go up and down based on the market value, since the Zakah on those type of assets. And again, I want to mention something, that we're talking about a portfolio that the holdings considered to be urud tijara, commercial goods. So in this case, you pay the Zakah based on the market value. Even if the price goes up after the Hawl date, you will not owe any more Zakah. Or if the price goes down, the Zakah will not change. Once, that's why you set your the date of the howl, you fix that date, and you look at the NAV or the market value at the date of the howl. And if it's really an income stocks, again, it doesn't go by the NAV. If it's a stocks that you invest in to derive an income, what we call urud mustaghalla, then also you calculate the zakah based on the current assets on the balance sheet of the company as at the date of the howl. If it's not available, you use the closest balance sheet to the date of the howl.
So I think one way maybe just to think about it is that the howl date is like a snapshot in time. You take that howl date, you see everything that you own, your assets, and you calculate zakah based on that, regardless of what happened before the howl date or after. Okay.
Correct.
So next question, do you add assets that belong to orphans that you have adopted or whom you support? So it looks like, yeah, so do you include that as a part of your zakatable assets, those assets that belong to orphans you've adopted or that you support?
Yeah, the assets of the minor, they are zakatable. Zakah is mandated on even minors, and the guardian is responsible to pay the zakah on his behalf.
Okay. Next question, do you have to deduct your pension and Social Security? I'm assuming maybe this means...
Mm-hmm. Yeah, go ahead.
I'm assuming this means the income that somebody is deriving from their pension and Social Security benefits.
If that income that you derive, whatever left in that income that you derived from your Social Security and lasted for the whole lunar year, then whatever left of it is zakatable at 2.5% because you pay zakah as cash, as money sitting in your bank account. If you spend it all before the howl date, then there would be no zakah because it wouldn't exist at the time of the howl.
Another question, and this is a good question, what are some other examples of expenses that can be deducted besides mortgage payments? For example, can you deduct car lease payments, the payment maybe that is due before the howl date?
You can. Absolutely. Any form of that is due before the date of the howl is deductible. And I would give also people, that if you look at the wisdom of the zakah, it encourages us not to set on debt. So even if you decide to pay the debt, if you have money and you decided to pay the debt before the time of the howl, yeah, you can pay that amount of debt, and that would reduce your zakatable assets. So you will be paying zakah on lower amounts of money since you paid it off. That would be also good. So the wisdom here about how you treat the zakah, the Islamic Sharia encourage us not to be in debt, and that's why any debt due or paid before the howl, that would be reduced your zakatable assets.
Okay. Next question, do you have to pay zakah on a private investment, such as non-public shares of a company? So somebody owns an interest in a private company, for example, and the value is unclear. How do they pay zakah on that investment? Yeah.
Well, you look at what type of investment. Again, how you're investing. This is an investing that you are benefiting from the price appreciation, so you can sell that investment at a higher price, or this is to derive an income, etc. And also, remember, one of the requirements of zakah that the ownership has to be complete. And in other words, if there is any gain, the gain has to be settled. In other words, if the gain is not settled and you have to wait for a period of time and you don't know the amount, so again, that hinders complete ownership, and that may jeopardize the situation of the assets to be zakatable or not. If you have any specific type of asset or any type of arrangement that you would like to share with us, feel free to contact us after the seminar, or you could send an email to give us more information about this type of investment. So again, depends on we need more information to be able to tell you whether this would be zakatable.
And actually, unfortunately, we're not able to get to all of the questions. We had a lot of great questions. We have reached the 2 p.m. Eastern time now, so we do need to wrap up the webinar. But anybody, if we did not get to your question, hopefully we can take them offline later. Please feel free to contact us again. And you can contact us and we'd be happy to, again, address your questions. Again, thank you to everyone who was able to attend the webinar. We hope that it was beneficial for you, and inshallah, we look forward to hearing from you and, again, answering any questions we were unable to answer today. Thank you again.
Thank you, everyone. And you have a blessed Ramadan.